Bank of America, JPMorgan Chase, and Wells Fargo may have to set aside an additional $30 billion to cover possible losses on home equity loans, according to research firm CreditSights. Now, the amount is almost equal to analyst estimates of profit at the three banks this year. Potential write-downs on the loans are casting a shadow over earnings, just as analysts are trying to figure out how much and how quickly loan loss expenses will decline from their peak in June of 2009. Now, CreditSights analysts believe the process of writing down these loans will take months, and it won't hit financial statements until later this year. Part of the problem is those second lien mortgages, since most second loans and most home equity lines of credit rank behind the first lien debt. Now, at this point, not many lenders have agreed to reduce or forgive home equity loans under the government's new programs. Late payments on home equity lines of credit rose to a record in the fourth quarter. And the four biggest U.S. banks, as we mentioned, Bank of America, JPMorgan, Citigroup, and Wells Fargo, hold about 42% or $442 billion of the $1.1 trillion in second lien mortgage loans. Now, that's after U.S. banks and brokers have taken $294.6 billion in losses already related to credit costs, loan write-downs, and also increased provisions. Now, Eric, JPMorgan Chief Executive Officer Jamie Dimon, as you remember, told investors in February that quarterly write-downs for home equity lending could reach $1.4 billion in 2010 for the bank, and that would produce record write-offs of $5.6 billion this year, 19% more than 2009. The bank's home equity losses will be 3 times higher than in normal times. And Eric, banks, some bank analysts, they're trying to be a little bit more optimistic, putting a rosy picture on the matter, saying that some banks have already booked large loan loss expenses, which can be used to absorb those additional write-downs without subtracting from earnings. We'll have to wait and see. As you know, those bank earnings get kicked off very soon.